Now, India's passenger vehicle market recorded strong momentum in the month of November, with domestic wholesales touching 4.25 lakh units, a sharp 20.7 year-on-year jump, 20.7%. That's almost 21% jump over the last 1 year. Now, the surge comes on the back of strong demand and the recent GST rationalization, which has reduced prices for several models. Automakers say the market remains extremely bullish, with some companies reporting that several popular models are completely sold out at the factory level. Now, dealer inventories currently stand at around 80,000 units, with another 40,000 units in transit, reflecting the continued pressure or supply. Now, the country's largest car maker, Maruti Suzuki, posted a 21% rise in wholesales to above 170,000 units, and production teams are working overtime to meet December demand as well. Industry data also shows that Tata Motors retained the second position in November with almost 57,450 odd units, up 22%, while Mahindra & Mahindra reported almost a 22% growth with 56,336 units. Meanwhile, Hyundai's domestic wholesale rose just 4.3% to 50,340 units, supported by stronger festive demand and GST 2.0 reforms. Toyota Motors saw 19.5% increase, dispatching over 30,000 units in the month of November, helped by sustained demand for its recently updated models. Overall, November marked another month of broad-based strength for India's auto sector, driven by festive sentiment, tax rationalization, and a renewed push in production and exports. You're talking about the fundamentals in the economy, which seem to be strong, but the data seems a little confusing, to a layman. So help us understand, Mohit. You're seeing Q2 growth pretty much, the government and data being, hitting the ball out of the park with 8.2% growth. But then the month after, the October data, IIP is correcting. IIP, in fact, is down about 0.4% or so to a 14-month low. Now, add to this, one assumed that there is going to be, of course, some sort of an uptick in auto sales for the month of October when GST cuts first came into being. But what we are seeing is that in the month of November, auto sales again are almost at a lifetime high, and GST collection for the month of November is actually lower, in the lower range of the average, to about 1.7 lakh crore rupees or so. So overall, the data doesn't seem to be aligned. There's no, even in the macroeconomic data, there's no one singular sort of trend line. You're seeing great Q2 numbers, you're seeing weak IIP numbers, you're seeing great auto sales, you're seeing weak GST collections. How does investor make sense of something like this?
Oh, absolutely, Kartik. I think the data is quite confounding, to say the least, honestly. But I think there is some amount of lag effect, because auto sales, typically you are looking at a retail sales number. However, at a distributor level, from a company's perspective, they've kind of front loaded the inventories to the distributors. So there is some lag out there. You cannot like really put a trend month on month and say that the numbers would start reflecting every month in a unilateral fashion. Having said which, I think the consumption trend in the economy, because of the two tax cuts, the indirect and the direct tax cuts, should start reflecting effective December, or perhaps from the last quarter of this financial year. That's my sense. If it doesn't reflect then possibly there is no consumption pickup in the economy per se, but I doubt that, right? So we will have to wait and watch. With regards GST, look, I think real GDP, everyone was projecting around 7.5 kind of levels. It's come out at 8.2, which is a shocker of a number. But I think broadly it's understandable kind of a number. I think the problem with the country today is that we're dealing with a very low nominal GDP growth, which I think is kind of derating the entire market multiple, right? The market multiples, the P multiples, are a function of what your nominal GDP growth is. And if you're consistently at a very low single digit, not a very low, sorry, a single digit nominal growth number, then the market P multiples will continuously keep unwinding, will keep coming down. And that's the problem. I think the nominal GDP number has to start coming up above 11, 12 kind of numbers for the markets to have a sustainable rally, or for the multiples in the market to sustain, and then for the markets to put a leg up.